Hi guys, welcome back. Trader Stewie with you here with the artoftrading.net. I want to do another video for you guys about a trade that we did today at the artoftrading.net. And also not only that, I also want to talk about kind of like just the market in general and what kind of market we're in right now and just kind of what to expect maybe going forward, like, maybe next few weeks, just with in an uncertain market. Um, but let's get to it right away. Basically today, I came into to the day today expecting the market to rally. So I was expecting an up day, I was expecting a decent up day for that matter. And so I came in, loaded with long setups. I was 100% cash over the weekend. So I came in Monday morning, I was ready to trade and ready to get long a bunch, whatever I saw that was of high quality, or that was stock that was setting up. So basically, I came in today expecting a rally, and indeed, we did see a rally very early on in the morning. We had the Dow Jones was up maybe about 80 points. S&P was up, a few points. Nasdaq was up a tiny little bit. And that was, however, my wariness. This is where I started to become skeptical of the rally. So even though I was in cash, I was ready to deploy my cash, ready to deploy capital, and to get long a bunch of stocks. Basically, I remain on the sidelines, and I emailed my subscribers and I told them, guys, please, don't get long anything right now. This rally is very very suspicious, and here's why. This is why I thought that the rally was suspicious in the morning. Even on Twitter, I talked about it very early on that it might be easier to be short today than long, and this was meanwhile the market was still up a little bit, because under the surface, this is a term I like to use all the time. You always want to keep track, not just of, like, you don't want to just see what the Dow is doing. Like, for example, like, you don't want to, like, oh, okay, the Dow's up 80 points, or the S&P is up, 10 points. For me, I don't care about that. For me, all I care about what's happening, what are the stocks doing. So this is not like the stock market. Think about it as a market of stocks. What are the stocks in the market doing? So I don't care what the stock market is doing. I care what the stocks in the market are doing. This is what I need to focus on. So while the market was up, 80 points on the Dow, a few couple points on the S&P, Nasdaq was up a couple as well too. What I started noticing like tech stocks were kind of weak. So as you can see here, FFIV was weak, JDSU was weak, CURS was weak, Amazon was weak, Baidu was weak. So there was a bunch of stocks, that started to catch my attention. Like, okay, now this is, I don't like to see a rally which has a negative divergence. For example, I don't like to see, S&P is up, but technology stocks are taking a beating, or financials are taking a beating. I like to see a good, healthy rally, a broad-based rally with many sectors participating. So this to me, this was not present today. So that's why that made me very very cautious about entering into my long setups, which I had ready from the day before. And I also sent an email to my subscribers telling them, please guys, be careful, don't enter any longs right now. This rally is I'm very very suspicious of this rally. So basically, right away, I started looking for short positions, because when I saw the market start to weaken under the surface, the rally was not confirming. There was lots of stocks down. A lot of stocks were actually started to go from green to red. Whenever you start to see stocks on your watch list start to go from green to red, that should be your first warning sign that something is not right. This rally is starting to lose momentum under the surface. It's starting to deteriorate. So this is a huge red flag. Whenever you see that, right away you want to be cautious. You want to tighten up stop losses, or you want to just kind of like hold off on longs for a little bit. You want to be, you don't want to be rushing into longs, as when you start seeing your watch list slowly deteriorate, from green to red. So you know eh, right away we start looking into short positions. And one of the short positions that I've been watching for a while is this one here, is MIPS. And my friend Fuinha in the chat room, good friend of mine, good, been a subscriber for my service for a very long time, and a friend of mine as well too now. And basically he brought up this stock, and this is a stock that I've been watching myself personally for a while, and I've been waiting to short this one on any sign of market weakness. I'm the kind of trader, I don't like to short strong stocks. I like to short stocks that are already weak. I want to short the stocks that were not able to rally when the market was rallying. So does that make sense? So I want to pick on the weak targets. So to short stocks, you want to short the ones that had trouble even moving up while the market was strong. So you want to short the stocks that had trouble, moving up while the market was strong. That tells you that once the market becomes weak, these are the stocks that are going to be the first ones to drop, or the first ones to see new lows. So basically, the first thing I saw here, what I noticed, is this kind of like a bear flag formation on a daily chart here in MIPS. And you can see here, this is the daily chart on MIPS. And you can see here a nice looking, bear flag type pattern, volume. You can see here the stock gap down here on earnings. And, ever since then, it's kind of been like, just kind of, it's sort of sick, like it hasn't been right ever since that gap down here on huge volume. Stock kind of been slowly dwindling lower. And you can see here it tried to rally on very, very weak volume, but you can see here, guys, just these big volume days on the downside. That's going to become an issue for the stock. So once the market starts to weaken, you want to be looking to short stocks like MIPS. Weak stocks are already weak during a rally. So that was what we saw earlier. When I looked at it this morning, it was around 1170, 1175, and this is what I saw right there. So right away, I'm looking now to zoom in into the 5-minute chart, guys. So the daily chart looked like it was ready to break down. Now I'm going to zoom in and take a look at the 5-minute chart and try to pinpoint an entry. So um, as you can see here, this is the 5-minute chart right here. Okay, 5-minute chart right here. So the first thing I saw when I saw MIPS on the daily chart was that bear flag on the daily. So now, what does that bear flag look on the 5-minute charts? Well, here we go. It looks like this. And as you can see here, a beautiful looking bear flag type pattern, and it started to roll over here, and it broke down through that 170, that 175 area. So quickly, I sent out the alert to my subscribers to short MIPS at 170. So we entered the short position around right here, and we put a stop loss at $12. So short at 170, stop loss at $12. And as you can see, guys, I always say, this is one of my golden rules in trading. Is always, look for the trades that work right away. These are going to be the nice winners, the big winners. So you can see here, this trade obviously started to work right away. So your analysis was confirmed right away. Meanwhile, the market, it went from being what the Dow was being went from being up 80 points when we entered the short positions. The Dow was maybe up like about 15 or 20 points, and then the Dow really started to tank, and then MIPS came right down with it. And by the time MIPS got to this point here around 1120, around the 1120, 1121 area, the Dow Jones was maybe down about 100, 110 points. So as you can see now, guys, the Dow was up 80, and now it's down about 110 points. So now you're talking about almost a 200-point swing from top to low. Okay, so that tells you that, hey, we might be getting a little bit oversold now, so we should be looking to cover the short position around this time. And obviously, you want to keep lowering your stop losses just to protect your gains. And also I kept emailing my subscribers to keep lowering your stop loss, to keep protecting those gains. So we lowered the stop loss initially to 170 after we were profitable. Then we lowered it again to 1170. Then we lowered it again to 1155 around this area right here just to protect gains. And as the stock kept tanking, my target was 11. That was my ultimate target for this trade. But you know what? You cannot be greedy in a choppy market. So because in a choppy market, the market is not gonna go up, just down straight. It's gonna go straight down for a little bit, and it's gonna come right back up again. This is a choppy market. It's a market that basically rallies. It's a market that basically sells off. But when you take a look at the chart, a week or two later, you'll see that really the market went nowhere. So it's very, very important when you enter a position in a choppy market that you book profits very, very quickly. So, in this kind of environment, day trading or maybe swing trading for 1 or 2 days, that's the advisable strategy. This is the kind of strategy you want to be looking for. This is not really the kind of market that you want to buy a stock, and you want to hold it for, a month or two. This is not really the kind of market for this right now. It's just the market, this is not what it's calling for right now. So it's calling for range bound strategies. So we entered the short at 1170, and when I ended up covering the short at the 1135, and we ended up emailing my subscribers the cover alert here 11 at 1135. So we made a good quick 3%. About 2 hours, a 3% gain on a short. Not bad gain at all. So basically, covered the short here. Now we move back to 100% cash. But now, what caught my attention here, real quick, and I just want to touch on this real quick, is this 60-minute chart here on the S&P 500. This is so here you go. This is the S&P 500. This is a chart which I watch all the time. I don't really make any trades until I see what the S&P 500 is doing. So basically, as you can see here, guys, the market rallied up here early in the morning, and you can see here it touched an area of resistance here, this around like this that 1330 area. As you can see here, that 13 area is starting to become an issue. It failed here once and twice, and now it failed here almost a third time, and you can see it tanked right away. So S&P touched that. So as you can see here, the high was 1328 area. So we touched resistance and we failed right away. But take a look, guys. This is where we covered our MIPS short. This is the reason why I covered my MIPS short, is because the S&P 500 right away touched this upper trend, this up trend line here on the 60-minute chart. You can see how, and this is exactly what I was talking about earlier, guys. So you see the market, it will sell off, it will rally, it will sell off, it will rally, it will sell off. And now we're starting to build a little rally here. And I'm actually looking for a little rally here in the morning tomorrow. I called for a rally earlier on Twitter, and to my subscribers, we went long a couple positions, near the close, anticipating a rally in the morning. But basically, guys, bottom line, what I'm trying to portrayed to you guys here is this is a choppy market. In a choppy market, you cannot chase strength. So for example, if you're chasing here up here as the market is running higher, you're chasing up here, now you're stuck up here, and then the market tanks. On the same token, if you're chasing a short setup and you're shorting as the market is dropping here, now you're seeing yourself stuck right as the market's starting to rally. So you kind of have to be anticipatory a little bit, and you want to be shorting near resistance, buying near support here. The cool thing about buying, when you keep track of the S&P 500 on a 60-minute chart like this, is that now you know where the support levels are. See that, guys? You can now you know where the support levels are on you see this rising trend line here, and you can see where the support levels are. You can enter long positions around right here, and the stop loss, if the S&P breaks this level here, you get stopped at for minor losses. I mean, this is what you're trying to do here. You're trying to enter in a choppy market. You're trying to enter when the trade is least obvious. Obviously, when the market is down here, it feels like it's about to break down. But just remember, you're in a choppy market. This market still, it has no reason to break down yet. And at the same time, when we get up here, it has no reason to break out yet. There's really no bullish catalyst right now. There's just too much uncertainty right now. With the whole Libya thing and the high oil prices and stuff. So you want to keep that in the back of your mind. When you're trading, just keep in mind that there's uncertainty. So, yeah, the market might sell off, but at the same time, will there be good news? Who knows? If there is good news, the market's going to rally. At the same time, we cannot rally too much because, hey, what if there's bad news? Oil prices goes up more. Now we're going to tank again. So don't forget, the market, it has a good reason to be stuck in this range because it's uncertain. It does not know its own future. Okay, this is why the market has been so tricky over the last month or so, and I know a lot of traders have gotten frustrated, trying to deal with this thing. But this is the market that we're in right now. So you either have to minimize activity to a minimum, or B, look to book profits very, very quickly. So you're looking to turn over, do an inventory turnover quickly. You enter shorts, cover quickly. Enter longs, sell quickly, until this range starts to either break higher or break lower. Okay, I hope this makes sense, guys. And we'll do more videos in the future and talk about many different topics. But I just wanted to touch base with you guys on this. And I haven't done a video in a while. I'll promise I'll do more in the not too distant future. Good luck to everyone tomorrow.